Hello everyone, thank you for tuning in today. My name is Christine San from the Research and Consultancy Department at OrangeTee & Thai. Welcome to OrangeTee Market Pulse. We aim to share some property insights and the latest market developments that may be of interest to you. Today, I'll be sharing with you the performance of the HDB resale market for the second quarter of this year. Given that the pandemic is still evolving and the uncertainties facing the global economy, HDB resale prices remain surprisingly stable over the past 2 quarters. According to the HDB public housing data, prices of resale flats rose marginally by 0.3% after remaining flat in the first quarter of this year. The resale market managed to avoid a major price correction despite the onslaught of an unprecedented global health crisis. In past crises, prices fluctuated more dramatically. For instance, the HDB resale price index plunged 9 quarters during the Asian financial crisis in 1997 and declined 8 consecutive quarters during the dot-com bubble crash and 9/11 attacks between 2000 and 2002. The current price resilience could be due to a few factors. For instance, the government released 4 stimulus packages totaling about $100 billion to save Singapore's economy and prevent large-scale unemployment. Currently, the stimulus measures seem quite effective in preventing a housing market meltdown or property price collapse. There are also other instruments in place, like the mortgage servicing ratio or MSR, that limits the amount that homeowners can borrow. Well, on hindsight, these measures seem quite effective in preventing Singaporeans from over-leveraging. For those who encounter financial difficulties, they can apply to defer their loan repayments. Currently, we have not observed panic selling in the market. The measures could have prevented homeowners from selling their units at excessively low prices during the current crisis. In contrast, resale volume was more adversely affected. Last quarter, the number of transactions dipped by more than 40% when compared to the first quarter of this year. The sales volume hit a historical low in April and May due to the circuit breaker measures when all house viewings were barred. However, sales rebounded strongly in June once the measures were lifted. The number of rental applications declined by 9% last quarter. We observed more rental renewals in recent months as many foreign workers cannot return to their home countries or travel to other countries for new work assignments. Some employers have also arranged alternate housing for workers who were affected by the border lockdowns and were unable to commute daily from Malaysia. Although market sentiment was more subdued, the HDB resale market was not as severely affected as expected. Therefore, the road to recovery may not be a lengthy one. We may expect demand to gradually recover in the coming months. As more flats reach their MOP and are eligible for sale, the increasing supply of flats may continue to exert some downward pressure on prices. I hope this video has been useful to you. Please tune in to our other video series and visit our social media. And remember to like and subscribe to our channels. Thank you once again. I'm Christine San. See you in our next episode. Till then, take care and God bless.